Hello everybody, welcome once again to this channel. Today we are meeting here for class 12 students. Students, in the previous class we had done issue of debenture for consideration other than cash, and we had understood theoretically how to pass the journal entries when we are issuing the debentures to the underwriters for underwriting commission. In case you have missed the previous video, please follow the link in the description box. In the playlist, all those videos are there. You can refer to any of the previous videos. Now, today we are going to solve a question based on this concept only, and also in today's video, we are going to learn how to pass the journal entries for taking over the business of other concern, and when for this work the consideration other than cash is paid, means issue of debenture is done. Let's get started, students. We had seen the journal entries of issue of debenture to the underwriters. Let's have a quick recap of those journal entries, and then we will understand it more clearly through the practical question. So when we are issuing the shares to the underwriters, the first entry is going to be underwriting commission account debit to underwriters. Since underwriters are liability, we have raised the liability in first entry, and in the second entry we will discharge this liability by debiting underwriters and crediting the debentures. If you have issued the debenture at par, only percentage debenture is going to come. If you have issued the debentures at premium, then the security premium reserve is going to come on the credit side. And in case you have issued the debentures at discount, then discount on issue of debenture is going to come on the debit side. At the end, in all these entries, we will have to write off discount on issue. We have to write off underwriting commission, because underwriting commission is an expense which is to be written off. It can be written off from statement of profit and loss, security premium reserve, or through other general reserves, etc. Whatever is given to you in the question. In case if no information is given to you, then always take statement of profit and loss for writing off such expenses. In case the debentures are issued at discount, then you will have to write off discount on issue of debenture account as well, in addition of writing of commission on issue of underwriting commission. Now, let's see one question which is based on this concept only. With the help of this practical problem, we will understand everything more clearly, and it will be a quick recap for all those students who could not revise the previous video. Let's see. Max Limited issued 5,008% debentures of 100 each at a premium of 10%. This is the issue of debenture to the public students. Read it very carefully. Till now, the question hasn't started speaking about the underwriting commission. From the next line, it is talking about that part. Basu had underwritten the subscription at a 5% commission of 5% payable issue of 8% debentures at premium. So, who is Basu? Basu is underwriter, and his commission is 5% of this issue price. Okay, so first of all, we will have to find out the commission which is to be paid to Basu, and then second thing, we will have to find out that how many number of debentures are to be issued to Basu, since the question is talking about the issue of debenture to Basu at premium. So first of all, let's see what is the issue, or we can say what is the, instead of issue I am writing calculation of underwriting commission. So underwriting commission will be calculated like this. Number of debentures are 5,000. They are issued at 110 rupees. Why 110 rupees? You can see at a premium of 10%. So this is 5,50,000 rupees for which these debentures are issued. So 5,50,000 multiplied by 5%. This is Basu's commission, which is coming up to 27,500 students. So the first part in this question is to be done, the calculation of underwriting commission. Now when we discharge this underwriting commission, they are saying that it will be given to him at 10% premium. So number of debentures to be issued, for underwriting commission It will be the same formula what we had done earlier. We will write PC in place of PC means purchase consideration. It is going to be the underwriting commission over here, and IP means issue price. It's going to be 110 rupees over here. Okay, so what you have done, you have issued the number of debentures to the underwriter who is Basu for 110 rupee each debenture. So the amount of debenture is coming here 250 debentures. Okay, this is a preliminary work which you must always do before starting the question. Now let us start doing the question. The question has asked us to pass the journal entries. Again, one important thing I want to draw your attention towards is this. The question hasn't specified that you have to pass the journal entries only for the underwriting part. It means the journal entries need to be passed for issue of debenture to the public as well. So what we have already completed in the previous classes, we will apply that previous knowledge. So journal entries in the books of, you will have to complete all those formalities. Students, do not become lazy in completing that. Write date, particular, ledger folio, amount and then pass the entries. So the first entry is going to be bank account debit to debenture application and allotment. Remember, whenever the lump sum amount is taken from the debenture holder, we pass the entry debenture application and allotment. And this is 5,000 debentures of rupees 110 each. So amount 5,50,000 is going to come over here. I'm assuming that all of you are writing along with me. If not, please stop the video here itself. Go get your notebook and pen and start doing it. Otherwise, it is simply a waste of time if you're just watching the video and not writing it down. You have to write down. This is an educational video. It cannot be seen like watching any other video which is for the entertainment purposes. So the second one is debenture application and allotment account. Will be debited to percentage debenture. What was the percentage of debenture? The percentage of debenture was 8%. 8% debenture. These are the name of debenture. So 8% debenture and securities premium also. So here we are going to write 5,50,000 rupees. In front of debentures, it will be 5,000 multiplied by 100 rupees. And here it is going to be 5,000 multiplied by 10 rupees, which is 50,000. The next entry is for underwriting commission. So here the entry is going to be underwriting commission account debit to Basu. Since the name of underwriter is given, so we will write Basu's account. Basu is our underwriter. And we had calculated 27,500 as underwriting commission because we have already done that working note. We don't have to write here under brackets. Then the next entry is Basu will be discharged with the number of debentures issued to him. To Basu's account debit to 8% debenture, and to Basu also debentures are issued at premium. Debentures account and to securities premium also. So here I am going to write 27,500. My number of debentures were 250. So 250 multiplied by 100 will come over here, which is 25,000, and 250 multiplied by 10 means 2,500 is going to come in security premium reserve. Okay, sorry, not security premium reserve, security premium as per the latest change. So now let's understand in this question, very important thing is there. What is that? In this question, we have to write off underwriting commission commission. But usually when no information is given to us, we write off underwriting commission through statement of profit and loss account. But students who are vigilant enough will understand, I had told you that security premium reserve has specific uses, and one of the use is this, that's underwriting commission on brokerage etc. can be written off from this account. And in this question we have presence of security premium reserve two times. Once we are issuing the shares to public, at that time 50,000 rupees, and here also 2,500 rupees. Enough amount is there, so write off the commission or underwriting commission 27,500. So here we are going to write securities premium instead of writing statement of P&L. Securities premium account will be debited, securities premium account debit, and on the credit side we are going to close down underwriting commission. This is called writing off underwriting commission. We are closing off this account, and 27,500 is being written off from security premium. So this is another important point, students. See how important it is to bear everything in the mind, because if you do not revise the concept and you forget, you would have passed the entry statement of profit and loss debit to underwriting commission. That entry is not wrong, but for this question it would have become wrong. Why? Because you have security premium available for you. So if security premium is available, then it has to be utilized first. So you have to keep doing lot of practice, and theory is also equally important to understand the concept and to apply it in the practical questions also. So that's all. Now we are moving ahead to the next topic in today's class. Today's class agenda was to complete this and to learn the journal entries for issue of debentures when we are taking over the business. So what is, first of all, understand what is taking over the business. Taking over the business means when a running business is being taken over by the company, and in consideration they issue the debenture. So running business, whenever you are taking over, obviously that business will have sundry assets. Okay, they will have XYZ assets. It can be fixed asset, it can be the current asset, and obviously they will have sundry liabilities also. So they have sundry liability. Now everything of theirs have become ours, and we are agreeing on a price, that at what price we will purchase this business, which is called purchase consideration. So these certain things you should know. What are these things? Keeping this in mind, we will pass the journal entries. So write along with me, journal entries for taking over the business. For taking over business. So whenever you take over a business, number one, you are going to take all their assets. Their assets will become your assets. So first entry is sundry asset account will be debited. Then sundry liabilities account will be credited. Now you will write the vendor company's name, vendor company or vendor business, whatever. And also you will write in front of this purchase consideration, which I am writing in short form PC. Here you are going to write agreed value, at what value you are going to take over their asset, and at what value you are going to take over their liabilities. It will be given to you question in the question, don't worry about it. Now, in spite of writing all of this, there may be a possibility that your entry is not tallying. Entry is not tallying means your debit and credit are not equal to each other. In that case, what is the solution? In that case, the solution is that what you had studied in class 11. Yes, if it is coming lesser on the debit side, then it is considered to be goodwill. Why it is considered to be goodwill? Because if I am paying a more amount to a business, then it is required, my balance is coming more on the liability side. So liability side are sundry liabilities and purchase consideration. Liabilities minus assets is called net asset. So if your net asset is less and you're paying more amount to a business, then why are you paying more amount to a business? Obviously for taking over their goodwill, because their customers will become your customers now. So that is why this balancing figure is your goodwill, if this balancing figure is coming on the debit side. But it's not necessary that all the time the balancing figure comes on the debit side. Sometimes the balancing figure can come on the credit side as well. When the balancing figure comes on the credit side, then it is called capital reserve. What is the meaning of capital reserve? Capital reserve means you have paid less to the business. You have taken over their assets, you have taken over their liability, and what net amount you should have paid. Net amount means assets minus liability. If that is an X amount and you have paid the Y amount which is more than the X amount, then what? You are paying less amount. Your net assets are more and the business taken over purchase consideration amount is lesser. Why are you paying less? Maybe you have done a good deal. That is why you are paying less. So this is a kind of profit. But understand the nature of this profit. This is not something which is done on the regular basis. That is why it will be considered as the capital profit, and all the capital profit are taken to the capital reserve. So students, here this balancing figure will be taken to the capital reserve. Understand one more important thing about this entry, that in one entry either the goodwill can be present or capital reserve, both can be present in the same entry. Understood? Now the second part of it, the second entry of this is going to be same, pretty simple like we were doing earlier. We will write vendors account debit to percentage debenture if the debentures are issued at par. So I'm writing over here at par. If the debentures are issued at discount, then the same entry with the inclusion of discount at discount. So I'm going to write over here vendors account debit, discount on issue of debenture account debit, to percentage debenture. And here what I am going to do, one more additional entry I will pass discount on issue of debenture account to be written off. So that entry will be passed. I will write statement of P&L debit to discount on issue of debenture. And at last, if the debentures are issued at premium, then what will be the entry? If debentures are issued at premium, we have done enough till now, don't worry. Similar entry, what we had done at the time of machines purchase, vendors account will be debited to percentage debenture. And one more thing will be added over here, it is securities premium. I hope you understood all of this. Let's have a quick revision of this part, last part. If we are taking over a business, what will be the entry? Entry number 1 is sundry assets account debit to sundry liabilities to vendor business. If the balancing figure is coming on the debit side, we'll write goodwill account. If the balancing figure is coming on the credit side, we will write capital reserve. Then the next entry is issue of debenture at par. So we will write vendors account debit to percentage debenture. If we are issuing the debentures at discount, then the entry is going to be vendors account debit, discount and issue of debenture account debit to percentage debenture. If the entry is issue of debenture at premium, then vendors account debit to percentage debenture to securities premium. That's all. So this we have understood well, student. In the coming class, we will do lots of questions, not lots, sorry, one question on this concept, and then we will move ahead with another concept. This concept of issue of debenture for consideration other than cash is almost finished. One more class is needed for it, and then we will move ahead with the other concept. Till then, bye, have a great day, and yes, don't forget to subscribe the channel if you are new to the channel, and if you already have subscribed to the channel, then like and share this video with your friends. Bye.